Good to be back with you. My name is Peter Reznicek from ShadowTrader.net. This is another edition of the ShadowTrader Video Weekly for Sunday, August 29th, 2021. Powell spoke and the market jumped. This happens a lot. Probably the single most powerful individual on the planet in terms of the amount of influence that what he says has on the stock market. And we saw that clearly today. I'm recording this on Friday, August 27th, when he spoke at the Jackson Hole Symposium, giving the opening remarks at 10 a.m. this morning, which wasn't actually in Jackson Hole this year due to COVID. It was actually a virtual event, but his remarks had the same weight regardless. The market actually took off like a banshee as he started speaking and stayed strong all day. This is in direct contrast to what happened in 2013, if you recall. There was something called the taper tantrum, which where the market fell a bit because the Federal Reserve said that they were going to back off from bond purchases, essentially tapering those purchases down, which is essentially what they're going to do now. The gist that we got out of the meeting today is that it is going to happen towards the end of this year. Maybe around December, they will start curtailing those purchases, and they will not be raising interest rates until that tapering program is done. So we don't expect to see any type of rate raise until probably late 2022. Markets seem to like this very much. So this video is basically just going to be keeping it relatively simple. I want to show you where we're at from a technical perspective, especially on the S&P, because we're kind of climbing that wall of worry again. The same way that we were a couple of weeks ago. If you recall, I did a video called Dancing on the Edge, and it was basically about how the S&P was riding the outer part of a channel. You've got a channel like this, and we were sitting on the outer part, and we basically rallied right back to that channel again right now. So I'll show you where we're at technically, and in addition, I'm going to go through all the S&P sectors, but mostly I want to focus on just 2 to 3 that I notice are probably better buy points right now than others. I don't think any of those sectors really, to me, what I'm seeing in the S&P, are flashing anything majorly overbought, but some of them are better trades than others, and some of them obviously have poorer trade location than others. So I think the best bets going forward would be in the couple of sectors that I'm going to mention. All right, without further ado, let's get into it. All right, so S&P daily. Remember in the video we talked about, this is a couple weeks ago, talking about the dancing on the edge. That was this section here, and then we had a little bit of a pullback. One thing I want you to keep in mind when you look at this S&P, I was talking about this earlier today with my weekly options advisory subscribers, is this channel that we're in right now was defined by a start here. And you can do this kind of anywhere. Obviously, we could say it's like this, and draw the channel up like this, however you want to do it. But there's a number of different ways. But what I like about this particular channel here is that when I drew the anchors here and here, notice that it rides these parts exactly. So really the way you want to do a channel is kind of where it has the most touches. So if I start here, I'm not really touching these two, but I do what I call the swing out method. I bring it out, I swing it down, and where does it start touching? It starts touching here, and that's why I believe it's the right place to be. So just keep this in mind. It's just one data point. You're riding the top of the channel. We had a little bit of pullback, but what I wanted to say is that when we define the channel, notice that this pullback here basically set up the channel. And since then, we've had 1, 2, and 3 attempts to go to the lower end of the channel, which have all failed. Keep that in mind. So obviously, this is not sustainable forever. At some point, we will trade to the opposing end of the channel, just not yet, obviously. So just keep that in mind, that that's where we are, and there's no reason why this here can't continue like this and we have a situation like this, which obviously means that equities are strong, obviously. So just keep all that in mind. All right, now in the NDX, things look a little bit more bullish to me in that we had a pullback of just 2 days, and we have kind of day one of a breakout. So I foresee that this moves a bit higher in the near term. Only thing I would say to keep in mind on the NDX is look for overextension from the 20, but we don't have that. That's another thing, is that we've kind of been undulating on either side of the 20, so it looks kind of fine here at this point. And last but not least, the rut, which is also starting to flash, maybe a potential long signal, I don't know, but I've talked about this horizontal channel for a while in the rut. You can see the areas right here that it's been defined by where the small caps have gone nowhere for a while. But as I was alluding to in the intro, it would make sense to me that at this point we travel to here. We're well above the midpoint. This is the 50% retracement. This is the midpoint right here. And now we're well above it. So I think we travel to here. But then what happens if this decides to break out to the upside, which it could? Remember, it doesn't have to stop here. It's probably a short-term short here. If you can get to here, that's probably an IWM short. I would be looking at that as probably a broken wing butterfly or unbalanced butterfly at whatever price level here is in the IWM, basically. That's the way I would look at it, and try and collect a little bit of credit or put it on for free and have the IWM stop right here at this level. That's one way to look at it, that it'll probably get held there. But again, let's just think about different scenarios. What happens if the Russell moves to here and doesn't stop and then keeps going? Well, that's extremely bullish for the market. Now you've got confirmation of this third index that's been kind of a wild card for a while and has not been showing all that much strength. So, you know, when everything's kind of more in sync like that, it's a more bullish situation. But again, we'll see. I'm just kind of laying out a scenario that could happen. Okay, what I want to do now real briefly is I just want to go through the 11 sectors that make up the S&P. So we're going to look at, you know, energy, financials, infotech, communications, etc., all the way down through utilities, real estate, all of them. The 11 sectors that make up the S&P, because I think it'll give us a good idea as to what the underpinnings really of the market are, because obviously the S&P 500 can only be made up of these 11 sectors. It can only do what these 11 sectors do. So here's some, think of this also as trade ideas going forward, all right? Energy has been stuck in a rut for a while. This is not a big part of the S&P. I'm just kind of doing them in a funky order here. I'm not doing them in an order you know, of weight. This is obviously a long signal because this is 100% retracement of this down move, and that would also be the point where it breaks the trend line. So keep that in mind. So energy has potential to move a bit higher. Okay, let's look at another one. Let's look at XLC. This is communications. This is about 10 or 11% of the S&P. This is not at a buy point, I don't think, because there's no pullback here. The pullback obviously was here. It's very strong, but it should continue higher, and that has a decent amount of weight on the S&P. All right, let's look at some of these other ones. Financials, I think, look fantastic here. And this is one of the two sectors that I alluded to in the intro that I was saying I think are where people should be looking. Because notice that you have this 100% retracement from here to here. This is a classic cup and handle, and it's probably going to float higher. It just looks that way, right? Especially since you've retraced 100% of the down move now, and now it's free to break out a bit higher. So keep an eye on financials. I would be interested in some of these stocks for long play in the near future. I think these look very, very good. Okay, let's look at infotech. This is the granddaddy of them all. Notice that this chart looks almost identical to the NDX chart that we just looked at. No big surprise. It's tech, so it's going to look the same. There's some names here. Obviously, you know, I like the big marquee names. I like Google, Amazon, Apple, etc. That's a lot of the stuff that we play with in the weekly options advisory. I like those stocks a lot. I think higher from here for the same reasons why I think the NDX should move higher. We just talked about that. XLB, materials, not really a sector I would be that interested in. About 2.5 to 3% of the S&P, but definitely more bullish than bearish. XLY, consumer discretionary, a little bit more important. This is one we've talked about before that I think is kind of stuck in a rut. I wouldn't do anything with this sector. It's just a very large consolidation area. It's not really in play right now. Let's look at XLRE. Real estate looks good, just kind of sitting up at the highs. XLI, that's also in a consolidation area. I wouldn't really mess with that. It's just kind of stuck. XLP looks good. This is actually the other sector that I was thinking that people should get involved with in the near term, because I like the pullback here. Notice that you have trend here, and you have a little bit of a failure of trend, or rather I should say, you know, breaking down below trend, but failure to break lower, and that could be bullish. Plus you have these prior highs here,
kind of supporting in the same area. So keep an eye on this. This will be kind of pivotal, I think, to the market moving up. You know, not that it has to be. This is really about 7% of the S&P. So I shouldn't say pivotal because S&P can certainly go without it. But in a market that is really at the high end of a range, at all-time highs essentially, I tend to look for opportunities in some of the sectors that have pulled back a little, that might be a little bit weaker currently, that might be setting up a little bit better. All right, let's look at XLU, healthcare, also a little bit of a pullback. Excuse me, not healthcare, utilities, also a little bit of a pullback. Don't really like this sector. It's not really one that I would trade. This is only worth a few percent of the S&P. And last but not least, healthcare. This is almost 15% of the S&P. This is a big deal, and this one looks good as well. I would add this one onto the list, maybe even higher than staples. Like basically I was thinking financial, staples, and healthcare for the coming week in terms of opportunities. Notice that you've got 5 days down and you've just floated into the 20 MA and you didn't break, and basically all the touches here have been holding. And the 50, it just doesn't look like it. It would have to really, really break down to go to the 50. I think if the market stays even some semblance of bullish, you probably get a little bit of a pickup in XLV in these healthcare stocks.
And that's all for this week. Thank you as always for spending a little bit of your weekend with me. Before I forget, please hit the like button if you could on this video. That helps us a lot. YouTube algorithm seems to like that and keeps these videos on the air, so to speak. A couple of things. Weekly options advisory, which I talk about a lot in here. We didn't do a trade of the week in this video just for brevity, but we had a fantastic week. I think we came into today with like 9 trades open, and they were all winners, I think, except for one. And the one that was a loser might have lost like $24 or something like that. So we've been doing a great job in that advisory in terms of not only keeping everybody on the right side of the market, but putting on the correct trades for the type of market that we're in. This is a bullish market, but it's a relatively kind of tentatively bullish market, and you really have to kind of pick your spots wisely, and you don't want to get into a situation where you're laying out a lot of call debit. So, you know, we've been kind of structuring really well. We had some really cool things happen on this Friday. Those of you that are watching that are subscribers, you know that we had some, some cool trades on Netflix, Lulu, Amazon, etc. We did a bunch of stuff, and it's been going great. So if you're interested in joining me and trading live with me every day, not only trading live, but here's the main thing is, yes, I'm going to send you trades, entry, exit, management, everything. But it's the guidance that I give during the day that people really, really enjoy just as much. All day long, I'm sending out messages saying, hey, look at this, look at that, make sure you're looking at this. And I'm very, very careful never to kind of, send out too much stuff. It's really just the most salient stuff. So if I see something that's important, like, look, ES is coming into this trend line, or look, we've got a poor high forming on the profile, and 99% of the time market backs off from there. I take a little snapshot, I send it out, boom, you get it on your phone immediately. This is the way that I am on top of things like all day long for my subscribers. I also record What's Peter Thinking audio messages throughout the course of the day, which people really tend to enjoy. I just basically just grab my microphone and speak for anywhere from 1 to 2 to 3 or 4 minutes, and just basically give a detailed, explanation of exactly where we are at that moment. It's kind of like these videos that I do on the weekend, but imagine instead of it being like 10 to 20 minutes long on the weekend, it's like 3 minutes long, and it's actually happening right at the moment. It's like relevant information that you can actually put to use right at that moment. All right. So if you're interested, join us. Always $49 a month, never a contract, probably the most reasonable deal on the street. Click this little button here. On my left up there, you can see it right there. If you click that little button, it'll take you to our website. You can sign up there. All right, let's recap just a little bit what is going on with the market. S&P riding that channel at the top side. You could make the argument that it's not the greatest spot for longs. We'll see. NDX just broke out after a small pullback of just a couple of days, right? And Friday was basically that first day up, and the Russell still has some room to breathe to get to the top part of that range. We've been talking about that kind of horizontal range in the Russell for a while, and it has been in this large rotation back and forth. It still has some room to go to get to the upper part. And then think of it this way, and I'm not calling for this, but what if the rut actually ends up breaking out to the upside from the top of that channel? That would be very, very bullish for the market, all right? In the bigger picture, I think what the market is really telegraphing to us is very simple. It's that and we know this, I think, a bit clearer after today, is that it's not really scared of the taper. It thinks that the taper is going to be orderly. It thinks that the taper is not going to start till the end of the year, so there's no reason to pair equities right now. It doesn't really see any danger in the ramp up of new COVID cases due to the Delta variant. I think the market is pricing that the Delta variant situation is not nearly as potentially dangerous to economic shutdown as the first couple waves of COVID. You know, we can debate that all day, but that's obviously how the market, is seeing it. And that's really it. That's really basically it. So you have this kind of interplay between, the market kind of likes the Fed's stance, and then there's a little bit of danger of the COVID on the horizon. But obviously the market is basically choosing not to price that in as anything negative, and kind of assuming that is going to take care of itself. The Afghanistan thing also is kind of a wild card. I did want to mention that because that definitely came into play a little bit this week, but I put that right in the same category as the COVID situation. It's very obvious that the market does not price that situation that's going on there, as sad as it is, does not really see that as any sort of a problem. So when you're trading, think of these larger kind of macro things sort of in the back of your mind. I'm a big believer that you should never, ever trade on this fundamental data. It should just kind of be there in the background. Start with the technicals first. If the technicals are okay, that's when you want to continue to be biased long. Only change your stance when the technicals change. But I'm a big believer that you shouldn't just change your stance just because of some macro event that's happening. I think it's okay to back off a little bit when you know that a macro event is on the horizon, such as this Jackson Hole. I purposely didn't want to structure anything with any big debits, on the call side coming into this week, because I thought there was potential that the market might not like Mr. Powell's comments, but the opposite happened. It did like it, but it's just can be very dangerous, I think, putting yourself ahead of that. I get the feeling from a lot of the people who email me all the time that they often put on positions that are reflective of that, meaning that they have lots of puts because they think something's going to happen because there's this thing on the horizon and they try to get ahead of it. And I've always been a big believer that that's not really the way to play it. Catching the absolute top or the absolute bottom is really a fool's errand. It's very, very difficult to do. And once the market starts moving in one direction, if you think it's down, if it's going to be sustainable, there will be plenty of short trades once it gets going. And you don't have to be ahead of it or have a bunch of long puts before the market falls at all. All right, so that's basically it for this week. Be very careful out there. Remember, you can check out what I'm doing with the weekly options advisory at this big link down below, shadowtrader.net/options. And on behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.